Good afternoon, everyone. Welcome and thank you for joining our Market Pulse H2 2023 Fraud Trends webinar. I'm Cheryl Prince, the Director of Fraud and Identity Management Consulting, and I will be providing an overview of our fraud trends for you today. Now, I'm excited to kick off our session today with our agenda, and joining me is Brady Harrison, Director of Customer Analytics Solutions Delivery with Kount, and he's here to share his insights on generative AI. And also joining us is Julie Kuzmic, Senior Compliance and Consumer Advocacy Officer, to discuss consumers being on the defensive with highlights from our consumer survey. Now, before I begin, I'm going to pass it over to my colleague, Sandra, just to go over a few housekeeping items.
Thanks very much, Cheryl, and good afternoon, everyone. Each area within the On24 platform is responsive, so you can maximize or minimize each widget or box on your screen based on your viewing needs. There's an Ask a Question widget underneath the media player, so feel free to enter any questions you may have, and we'll try to address them throughout our session today. In the event there's too many questions to get through, we'll reach out to you individually to follow up in the coming weeks. Our presentation, as well as some related content in English and French, are available for download in the related content area. Our session is also being recorded, and you will receive the on-demand link via email tomorrow. We'll also have some polling questions today, so keep an eye out for those. You can provide your answers right within the platform by selecting the appropriate option. And finally, some additional features you'll notice at the bottom of your screen are reactions. Let us know how we're doing. Register now for 2 of our upcoming webinars, Consumer Trends on March the 7th and our Business Trends on March the 19th. There's also our survey and Contact Us. Feel free to check any of these out and provide your feedback. We really appreciate it. Now let's get started. Cheryl, back to you.
Thank you, Sandra. So now let's start things off with a look at some of the economic indicators we saw during H2 23. Now, for the last half of the year, we saw the impact of interest rate hikes just beginning to slow down the rise of inflation. But despite the slowdown, we all saw food prices and other services continuing to rise, all factors that contributed to the ongoing pressures we saw consumers feeling. So what has that meant for credit demand? Well, we saw the overall demand for credit was lower in Q4 2023 compared to Q4 2022. Now, we do know the slowdowns in the mortgage market did play a key role. We saw inquiries down 5.3%, although the demand for credit remained high from the new to Canada and new to credit segment. So now, what fraud trends did we see? So while credit demand did slow down and fraud rates dropped by 11% year over year, the fraud rate continues to be higher than it was before the pandemic. Now, this is depicted by the gray bars on the chart to the left, representing the application volume. And the rate of fraud is depicted by the red line. So now, looking at the chart on the right, you'll see how fraud is broken down by first and third-party fraud. First-party fraud describing incidents of fraud where the borrower is knowingly using their own information or identity to commit the fraud. Whereas third-party fraud indicates that someone other than the owner of the credentials or identity is attempting to commit the fraud. So here we saw a significant increase in third-party fraud, identity fraud, while first-party fraud began to level off, if you will. Now, I'd like to get your thoughts here, Brady. Why do you think we're seeing this trend?
Yeah, it's pretty interesting overall. Again, I'm Brady Harrison from Count, focused on kind of all things fraud for Equifax. And our real theory of the case is, applications are kind of rising from a fraud perspective as we've seen kind of the easy money funnels from COVID relief, unemployment relief. That kind of easy money has kind of dried up. And just right about the same time that we're starting to see real increases in opportunities using generative AI. Some of it leveling off as the first party stuff is like, hey, it's really hard to do that kind of first party fraud where you're kind of lying about payroll or other items like that, and moving into third party where it's kind of attacking that either unsecured or secured lending environment, credit, right? That kind of stuff, especially maybe potentially some thin filers or new to Canada folks. Those are sometimes more challenging to effectively evaluate. And so there's some bad actors kind of exploiting the system, and then rather than targeting kind of federal funds or kind of provincial funds, targeting like bank institutions to kind of turn that stuff around. So from a risk perspective, it kind of makes sense. We're seeing people are less interested in doing it on their own. There's some economic overhang as well that may be clearing up a little, right, as interest rates stay high, but we kind of exit like the high unemployment, right? Lots of places are at full employment, so we're not seeing the same kind of economic risk there. Now it's moving into third party as those people used COVID to kind of skill up, and then plus generative AI, that we are having kind of a confluence of lots of money available to steal, lots of investment in technology on the offensive side, as well as this kind of paradigm shift in technology around generative AI that's breaking some classic systems.
Thank you, Brady. I definitely agree that these are some trends and indications of where things are going to be going this year. So now through our Fraud Exchange platform, our members tag applications with the reasons why they believe it is suspicious. And so when we look at those details, we see overall applications year over year. We saw that first party fraud essentially dropped just over 10%, which is really, again, a sign of the increasing third party fraud that we saw. We saw an increase of about 5% in the number of applications containing conflicting information. And this was driven primarily by the unsecured lending space. Now, we also saw synthetic identity, and that's described as an identity that isn't real. It essentially has been created by a fraudster using fake information, sometimes in conjunction with real information. But we know that synthetic identity fraud is on the rise. We did see some slight indications of it and attribute that, again, to some of the targeted fraud that has been happening. Now, if we look at true identity fraud, now this is where someone other than the owner of the personal data or credentials is using it and claiming it, essentially identity theft. So here we saw true identity fraud increase 8% year over year, making it the primary reason for the majority of fraudulent applications. Now, let's look at this in a little bit more detail, but by industry. So I did touch on earlier, the slowdowns in the mortgage market had an impact on the overall demand for credit. We do see that mortgage originations fell by 25% year over year, down from the peak of 2021. We also saw the average loan amount on new originations down year over year, but still significantly higher, about 21% more than what we saw before the pandemic. So we'll continue to see the high cost of borrowing and the challenging economy impacting consumers. Now, mortgage fraud rates saw a near 10% increase year over year. This is the highest we've seen since before the pandemic. Now, looking at Ontario, it continued to have the highest rate of mortgage fraud, although we did see a year over year shift, with Alberta now moving into second spot as the highest, with an increase of 18%, overtaking BC. Now, we know that this increased financial pressure, Brady touched on it as well, is essentially a key factor when it comes to fraud. We know when the economy is not thriving, the rates of fraud will inevitably increase. And so I'd like to go to Julie for a moment to have her share some insights on what she found about the consumer sentiment on the survey on how they're feeling about financial hardship.
Thanks, Cheryl. Just before I advance to the next slide, I just want to let you know that we did find some very interesting perspectives when we conducted our annual survey gauging consumer sentiment around fraud. Quick reminder, I'm Julie Kuznick, and I'm focused on both compliance and consumer advocacy, occasionally also being the class clown at Equifax Canada. The box on the left here represents the responses we identified when we identified a specific type of fraud. So what we're seeing here is that 56% of survey respondents agreed that people are more likely to commit fraud when they are having difficulty making ends meet, such as providing false information on a mortgage application. So we made a very specific example there. And generationally, you can see that the highest level of agreement with that statement came from the youngest group, the 18 to 34-year-olds. I should mention that this survey was done online by Leger earlier this month with a demographically representative sample of 1,614 Canadians, just so you can see what our context is. So look what happens at that box in the middle when we removed the specificity from the question. That middle box represents a more generic question around people being more likely to commit fraud or theft in these tough economic conditions, period. The number of respondents who agreed jumped to 76%, and it's relatively consistent across generations. The box on the right is where things really get serious. We asked the respondents if they themselves had considered committing fraud or theft in these tough economic times. Almost 1 in 10 of the respondents said yes, and the generational distribution really says something. You can see that the younger groups answered yes to that question with a lot more frequency than that 65 plus age group. So in answer to your question, Cheryl, as usual, our consumer survey respondents continue to share some eyebrow-raising thoughts.
Thank you, Julie. I have to say, I was pleasantly surprised to see that much honesty, even with 9% of respondents admitting to considering committing fraud or theft during economic times. Something we definitely will need to check on again in the next survey. So now when we look at mortgage fraud on mortgage applications, we did see an average of 50 to 60% of applications included falsified financial documents. During this time, we also saw a slight increase, almost 2%, in false employment and income, and just over 3% in conflicting information. All of that likely accounts for the drop that we saw in fraudulent financial documents that dropped at about 6%. So now turning to the automotive industry. Now the automotive sector continued reviving from the lows of the supply chain challenges that we had, with new origination showing some improvements. But the higher prices remained, and that continued to be a challenge, with average loans up 21 to 34% higher for new and used vehicles than before and what we saw before the pandemic. We also saw an increase in interest rates, something that continues today. So it's interesting to see how this has impacted fraud, something that's been in the news and making headlines quite a bit over the past several months. So while auto fraud dropped just over 2% year over year, the actual number of fraudulent applications increased over 14%. And that's with Ontario, BC, and Atlantic regions seeing the largest increase. Now, if we look at the reasons behind the fraudulent applications, we see identity fraud increasing. It has now doubled when compared to pre-pandemic times. And false income and employment also increased year over year. Now, some of the trends that we actually saw included false documents, false employment and income documents associated with collusive employers. We also saw false auto insurance slips on many applications and fake notice of assessments associated with fake bank statements, all linked to specific high-risk email domains. So I think most of us have seen fraud and theft as it relates to auto leading the top media stories. We've even recently seen the federal government committing millions of dollars to help fight it. Myself, on a personal level, I know I've been a little bit more vigilant, and it's not because of the cold, in making sure my car's locked up in the garage every night, because I want to make sure it's there the next day. So I'm sure I'm not alone. I am curious and would love to call on Julie again to understand how consumers are feeling. Like me, knowing that auto theft is on the rise, what's the consumer sentiment right now, Julie?
Well, like you, unsurprisingly, the attention of consumers when it comes to auto fraud is much more firmly on auto theft than on fraudulent loan or lease applications. Almost half of the respondents say they know someone who's been a victim of auto theft. Considering that number, it's even more noteworthy that almost 1 in 5 respondents in that middle box know someone who had their car stolen and inflated the value of their personal belongings on the associated insurance claim. Those two stats do skew a little more towards the younger survey respondents. When we presented respondents with the scenario of actually witnessing someone attempting to steal a car, a healthy majority at 88% said they would alert authorities, with an interesting skew towards the older generations. 97% of the respondents age 65 plus agreed with this statement, while a somewhat disappointing 80% of the youngest group, age 18 to 34, agreed with that statement. So let's dig into the insurance aspects of consumers' concerns. The top 2 statements here focus on consumer perception of auto technology as it relates to theft. Just over half of the respondents felt that keyless entry and ignition have increased the risk of auto theft. Just under half believe that tech developments like GPS tracking and anti-theft devices have actually reduced auto theft. 3 in 4 of the respondents felt that insurance fraud has a direct impact on their own auto insurance premiums, which makes that bottom stat not too surprising. More than 80% of the respondents felt that fraudulent insurance claims should be more heavily penalized. Sherol, back to you for more detail on the overall fraud picture when it comes to secured lending.
Thank you, Julie. With 74% of consumers stating they feel insurance fraud has a direct impact on the auto insurance premiums they pay, really speaks, in my mind, to sort of the broader issues and the broader impacts that fraud and theft is having on the auto industry overall. So as we look at fraud in the secure lending space, we know that affordability is going to continue to have an impact, potentially leading to more first-party fraud and even fraud for shelter. True identity fraud and synthetic fraud risks are really key factors that we believe will continue to increase. So what should lenders be thinking about? In addition to staying on top of current and emerging trends as you are today, you need to be thinking about implementing real-time fraud detection that really allows you to identify and action any high risks, any warning flags, red flags, really being allowed to validate that information early on, validating income employment, making sure that you have identity proofing solutions in place to authenticate and validate consumers. Also, having a 360 degree, as I like to call it, about the consumer profile and really their overall credit health is important. Now, Brady, maybe I can call on you for a moment. Just any other thoughts or recommendations for lenders or businesses?
Yeah, it's funny. This is like the secured lending, right? It's hard to steal a house, but we just talked a lot about auto theft. I think for folks kind of concerned in the U.S., we're seeing a lot of risk here with the kind of indirect lenders where you're not in the dealership per se, but you're lending on these vehicles, and hearing similar stories in Canada. I would be very interested to see if we dug into kind of your risk bucket of, take a look at your prime customers who defaulted early, like maybe not first payment default, but 90 days, 6 months. Primes, especially where you didn't recover the vehicle, there's a strong sense that a large proportion of these early payment defaults for autos are actually synthetic identities. So, you met with someone in the dealership, but the person that you met with and loaned to doesn't actually exist. And so the risk profile is essentially, hey, this person didn't exist before 5 years ago, and we think it's maybe a thin file or a new file, but in reality, it's probably a synthetic ID. So kind of at a brass tacks level for those folks lending into auto, take a look at your primes, because we don't see a ton of synthetic in the subprime, surprisingly. Why would I create a fake identity with bad credit, right? Doesn't make sense. Look for prime consumers where you get payment defaults pretty early, like first year, maybe first 18 months, where you didn't actually recover that vehicle. There's a good chance that vehicle ended up, if it's in the United States, ends up in Houston or Miami or Long Beach, in Canada, probably Vancouver, maybe PEI, and gets on a boat somewhere. And so from a risk perspective, we're seeing a lot of folks take advantage of using a synthetic identity to get the highest value, movable good. Right? It's pretty hard to resell a stolen house, but a $70,000 Lexus, pretty easy to put it in a shipping container and move it, especially when you loan somebody out at like a 830, and actually that's a synthetic identity. And so lots of risk there. And so the real opportunity is, can we attack some of that risk? Right? We're hearing some research that a fair percentage of risk in the auto space is probably actually fraud, cars that went sideways just because, not from a risk perspective, but it was actually fraud. The real consumer didn't decide not to pay. There's no real consumer to actually pay. So a lot of risk. That said, lots of opportunity to get better, especially as interest rates go up. That could be a differentiator on, hey, if we can take 1 or 2% out of the risk bucket, that's savings or value that you could pass on either to the dealership or just pass on to your members or consumers so you get more deal flow.
Oops. Thank you, Brady. Definitely think the auto space is an area where we need to have a lot of focus. I'm reminded of a case that actually happened here in Canada around the end of December. There were some arrests made with a couple who went across Canada using fictitious identities that they had created, in addition to several fake documents specifically around their ID, so driver's license and some other documents, but across Canada, targeting multiple dealerships, taking out cars and eventually having them shipped out to the port in Montreal or other areas. So it is definitely a concern. Okay, so looking at credit cards. Now, we ended the year on a high with credit cards, with 6 million new cards being issued. Now, immigration and population growth were key contributors to this. We also saw the average credit limit move to $6,000. So let's take a look at how this impacted fraud. So for those of you who might be trying to zoom in, I want to let you know this is not a typo. Credit card fraud rates have actually dropped significantly. They are down over 58% year over year. And I think many of you will recall from our last update, we saw multiple targeted attacks throughout 2022, leading into 2023. And we saw many lenders putting increased focus on detection strategies in this space. We also saw Quebec and Ontario switch places for the top 1 and number 2 spot in having the highest fraud rate. And taking back to credit demand, we see that credit application volume has and continues to remain high. Now, identity fraud continues to be the primary fraud reason for credit cards, with over 73% of fraud applications tagged as identity fraud. We also saw an almost 10% of applications had suspicious email domains, and 11% of applications contained conflicting information, which is up about 5 to 7%. Now, some of the trends that we saw specifically in this area included phone numbers that were linked to multiple true identity fraud applications. We also saw high-risk email domains coupled with common addresses and common phone numbers and common IPs, all that when looked at more closely had the same recent inquiries on their files. We also saw trends around the same phone number and address linked to multiple worthless deposits associated at various institutions. Now, let's move on to banking. Now, we saw identity fraud increase 50%. That may not be a big surprise to many. I mean, we've seen a lot of media news. I think I'm talking to more and more colleagues who are telling me that they've had family members impacted by some of the new scams, social engineering that we know is on the rise. We also are seeing fraudsters using more and more sophisticated techniques, including AI, and essentially creating more scams targeting consumers directly. So we know the Canadian Anti-Fraud Centre processed over 62,000 fraud reports with over 554 million in losses. Now, this is not specifically related to deposits or deposit fraud, But what it does show is a highlighting and growing concern and risk in this space. And I think of greater concern in banking is really the increased attacks that we've started to see. Now, if we take a look at banking, we saw the fraud rate for deposits beginning to normalize early in the year. However, the fraud rates began to increase slightly, and we saw a year-over-year increase of 1.5%. And we do see in all regions, it is significantly up year over year. You will see a significant spike in Quebec, captured to the right. Now, during our last fraud webinar, we identified, even cautioned against ignoring the rising rate of identity fraud. We initially saw 60% of deposit frauds a result of first-party fraud. However, that changed as we ended the year, with identity fraud now accounting for most fraudulent applications at almost 90%. Now you can see this broken down further on the right with true identity fraud and synthetic identity fraud. Again, big concerns. We see that fraudsters have likely shifted their attacks from credit cards to opening multiple accounts to commit payment fraud, or as part of new scams that they've created targeting consumers. I'm seeing lots of cases where coaching of victims is happening more and more often. And fraudsters are doing this essentially to help avoid detection, whether it's at a transactional level or at the application level. They're coaching consumers in what to say so they can commit the fraud even longer. Now, some of the common trends we saw here included high volume and number of applications with the same addresses linked to multiple common names. And what's not surprising and definitely follows the attack and theories that we've seen in the shifts from credit cards over to deposits is all of these applications have been processed in the same day. So we've seen multiple instances of this trend. Now, Brady, when you see these stats, what are your thoughts on these targeted attacks? Is AI playing a role?
I think certainly from a risk perspective, right, at a certain point, generative AI, which we'll touch on a little later, I think is driving a lot of scams, as you mentioned earlier. And as part of that, those funds have to go somewhere. And so the two avenues that we've been seeing is those mule accounts either get generated out of thin air, like making fake applications for deposit, direct deposit accounts, or they're taking over and compromising existing accounts and trying to get the information, kind of aligned. And so generative AI is certainly playing a role on a kind of second order effects level. There is some first order stuff where people are, if they're not super sophisticated, they might just go from scam to direct account out. But in general, I think it's playing a real role as we're seeing people move away from the harder stuff, right? If I steal a car or, do some, title fraud, I have a lot of steps there to deal with versus a scam, right? I can go from, phone call to cash pretty quickly and generally later into cryptocurrency or some, out of the country movement. And so it's just kind of like, we're just taking these steps down because it's a lot easier, right? We want to have it be easy to open new accounts and a really low friction experience because we know the lifetime value of an account can be super high for an FI, but there's a lot of risk there, especially if we're seeing that kind of velocity linking stuff that I think you can capture in kind of a modern fraud strategy approach. Like, hey, the same address, just use like 15 different applications. That's a risk signal that you could evaluate.
Thank you, Brady. I certainly agree. And I think this is going to be some trends that we're going to continue to see throughout this year. So now I'm going to touch on the telco space and what we have been seeing. So really the impacts of population growth and new to Canada and new to credit segment has contributed to the significant increase in telco demand. What we saw was 3.8 million accounts being opened in 2023. Now, some positive news here. We saw telco fraud rates drop 50% year over year, and the number of fraud apps decreased by 27%. Good news here. As we definitely have discussed, we do see shifts in flows with fraudsters. So certainly, while we do see things down, there are some cautions that we would still want you to look for. Again, first-party fraud and third-party fraud continuing to be risks, but there is an overall good news story here with telco. Now, some of the trends we saw in telco, identity fraud was down year over year, and that accounted for 15% of all fraudulent applications. We also saw worthless deposits increase, and that accounted for 41% of applications. Usage fraud was down, and that accounted for about 11% of applications. So maybe if you take a look at sort of the worthless deposits rounding out at the highest point, this is where there's an opportunity to certainly take a closer look at your overall strategies. So as we look ahead at fraud in the unsecured lending space, we know that identity fraud attacks will continue to have an impact. With stolen credentials and increasingly sophisticated scams, we know that fraudsters are evolving and shifting. That's one of the key messages I want everyone to walk away with. Really, we're going to see the high cost of living and affordability. We've talked about that throughout this presentation. The financial stress on consumers. This is all going to continue to have an impact on first-party fraud rates. And we do think the new to Canada and new to credit segment may mask some of the risks and rates of fraud, creating challenges for a number of our lenders and businesses as they're trying to look at their existing adjudication strategies, strategies around account opening, and I would even say strategies around authentication. They're all going to be critical components as you're looking at this segment. So what does that mean for you? What should lenders be thinking about? Implementing real-time automated fraud detection. Again, being able to identify risks early while not restricting good clients. That's critical for businesses right now. And lenders should ensure that they have robust authentication and identity proofing strategies in place. And I'm going to say not just at onboarding. There's at other stages where this can be leveraged too, at a transactional stage or even at fulfillment. So whether it is a lending product and later, once it's fulfilled, re-authenticating. And again, staying on top of emerging fraud trends. That's the best way to help build out your strategy. And really leveraging that analysis to refine and rebuild your customer segmentation strategies. That's going to go a long way in helping you mitigate a lot of this risk. Now, again, Brady, I want to call on you and get your thoughts here for unsecured lending. Is there anything else maybe I didn't touch on or you'd like to expand that lenders should be considering?
I think the one risk area that we're seeing really emerge in 24 is around authorized push payment fraud. With, most folks globally want to move to a real-time payment system where the ability to stop or, rescind that payment is fairly limited, if not available at all. Combined with the Gen AI stuff around scams is making this quite a challenge. And so unsecured lenders are kind of getting attacked at each section, right? Synthetic identities or identity theft, creating, false employment records, false identity records, then using that to get unsecured access to credit. Then, that money has to go somewhere, and then they'll use authorized push payment fraud to kind of quickly move that funds or move those funds throughout the ecosystem, whether within Canada or without. And so that's introducing quite a bit of muling risk or identity risk on the unsecured side, especially when most folks expect interest rates to maybe cool in 24. That's what the analysts are talking. If that happens, we may see people move more into these unsecured credit products. And then by extension, probably going to see a little more risk on the authorized push payment because there's no takes these backseats, right? And that's a real risk is the funds are, if they're gone forever. And that creates some systemic risk as those funds tend to move around. And so that's what we think on the deposit fraud stuff is a lot of authorized push payment powered by, romance, identity, other kinds of scams. Back to you. So we do have a poll
Thank you, Brady.
Around this.
Yes.
Go ahead. So the world of generative AI is moving at a fairly rapid pace. We're seeing real potential for this to use as part of scams and fraud. I'd be curious to see, has your company allocated budget to combating the risks of generative AI related fraud? Yes, no, haven't thought about it yet. I'll be curious to kind of see where people are in their life cycle. On the offensive side, bad actor side, they're already using it, right? We hear news stories all the time. 2 weeks ago, it was generative AI took a $25 million loss in terms of somebody got an email from their boss, then called their boss, heard their boss's voice, got on the phone, saw their boss's face, turned out it was all Gen AI risk. And the company ended up sending $25 million to fraudsters. So I'd be curious to see on the defensive side where people are at. So encouraging to see the 25% yeses. That's always really exciting that where people are kind of implementing those, whether on the actual tooling side, like confirming information. Not surprised actually on the no's or haven't thought about it yet. I think there's a lot of concern of, okay, we've allocated budget or we haven't. We either have but don't know what to buy or what to build, or no, because we don't know what to buy or build. I think that's a pretty common response in terms of, well, how do I attack this thing? That said, for the haven't thought about it, I think having a strategy in 2024 should prompt some discussions because, again, it's going to get worse before it gets better. But Julie, what is the kind of overall feeling from consumers around generative AI, kind of the fraud stuff on that side?
Well, as you've been saying, Brady, AI is definitely on the offense when it comes to unethical, illegal use of it, on the generative side in particular, and that has put consumers into a position on the defense. Those headlines are, I think, really hitting home for just about anybody who is paying attention. I mentioned earlier that this data reflects the results of a Leger online survey. As I mentioned, it was 1,614 Canadian respondents. Now, those who have been following our Equifax Fraud Trends webinar series will remember that we've been tracking consumer sentiment on some of these topics for the last several years. So first, I want to do a quick refresh around some of our standard questions before we dive into some of the new topics for this year. Starting in the top left, respondents still feel more vulnerable online than at home, on the go, or in stores. We have seen a bit of fluctuation here over the last few years. So from 78% up to 85% last year and back down to 80%. It does get interesting when we look at the gender gap, the bottom left. It was notable last year when that gap closed somewhat from 2022 to 2023. But now we're seeing more divergence again. the number of female respondents agreeing that they feel vulnerable to fraud online dipped from 88 to 84% this year. The men, however, had a more sizable drop from 82% last year down to 76% this year. Possibly some false confidence there on one side or the other. The top concerns that respondents identified have been consistent over the past 3 years. You can see that in the top right box. The top two are still computer viruses or hacking and a security breach at a retail or business that the consumer is involved with. And finally, in the bottom right zone, look how many people agreed that seniors are more targeted for fraud and scams. Almost 90% of the overall respondent base. I also found it interesting that the young adult segment agreed at a healthy 82% that seniors are more vulnerable, but the seniors themselves had an agreement rate of 94%. Let's dig into what consumers had to say about AI. 71% of the respondents felt that AI advancements are moving at a scary pace, potentially even to our detriment as a society. We'll dig into more specifics on the next slide, but well over half of the respondents admitted that they are finding it increasingly difficult to discern what is real and what is fake when it comes to potential scams using AI. When it comes to regulations and ethical guidelines, it's not surprising that 82% of respondents feel that these need to be stronger. Here's the thing though, as a group, consumers in general can be notorious for focusing on the wrong thing. Certainly, strict regulations and ethical guidelines can be an important factor in the evolution of AI. But the fraudsters using these tools to do damage were never following the regulations or laws to begin with. It's important to keep that distinction in mind. So we'll take a deeper look at how people feel about the use of AI in fraud detection technology specifically. You probably aren't surprised to see all these headings as potential risks related to the use of AI in fraud detection as perceived by consumers. I'm going to say that again, as perceived by consumers. Starting at the bottom here in purple, 59% of the respondents felt the benefits outweigh the risks when it comes to specifically using AI in fraud prevention. That's a healthy majority, but clearly there's still some work to be done to educate and reassure consumers about this technology, as 80% of the respondents feel that cyber criminals will exploit vulnerabilities in AI-powered fraud detection systems in order to launch more sophisticated attacks. Over 80% of the respondents want companies to be held accountable for the ethical use of AI and are concerned about AI being used to commit fraud through deepfake images and voice cloning, like that terrifying example we just heard from Brady. 59% were concerned that integrating AI into identity verification processes would increase the risk of personal data breaches and misuse. And if you weren't discouraged enough about consumers' perception of the use of AI ethically in the attempt to identify fraud, only 40% trust that AI advancements will eventually lead to a more secure and fraud-resistant digital environment. So for those of us who are incorporating AI and looking to harness all that power that it has to offer in an ethical and appropriate way, we really need to think about how to get that message across to consumers about all of the guidelines that are in place and that we are following in order to make sure that AI is only being used where it helps and where that can happen safely. Okay, moving back to consumer perception around some of the more traditional techniques for identity verification. You'll remember that we've been looking at this for a while, over the last several years. we want to figure out how much friction consumers will tolerate, because we often feel like they're talking out of both sides of their mouths, so to speak. So people want their data to be protected. They want to know that they're not likely to be targeted in a fraud scam, but they also want to get verified and authenticated really quickly because they just need to change their address really quick on the credit card that is absolutely definitely theirs. And there's that balance to navigate. So it's always reassuring to see that this is close to a third of the respondents saying, I would be more likely to choose an organization that has fewer steps to verify who I am. Well, that leaves the other 2/3 saying they're happy to go through some hoops in order to know that they're less likely to be fraud victims. This question on the right, I found particularly interesting. We've been tracking this for a while of what consumer perception is around the safest way for them to have their identities verified. And we are still seeing the majority of people think that PIN codes sent to their mobile device is the safest way to verify their identity. But here's what I find most interesting about this number. If you look at that bottom box, the 19% of respondents who chose the option, I don't know, or prefer not to answer, that is far higher. We usually see very small percentages, maybe 2 or 3% who are choosing that option on any given question. So when we're seeing close to 1 in 5 people responding that they don't know what the safest way is for a retailer to confirm their identity, that's a good area of opportunity as well for education. All right, so to sum it up, when we look at the themes that have come through in this year's consumer survey, almost all the respondents feel that seniors are particularly vulnerable to fraud, especially the people in that 65 plus age bracket are identifying themselves as being particularly vulnerable to fraud. Secondly, people have high expectations of both the companies they do businesses with and government in general to protect their own data. And then third, that concern about AI spills into the ethical and helpful use of AI, not just the generative AI being used by scammers and fraudsters in order to commit crimes. So some of the potential areas to think about as your fraud detection approaches are evolving are actually quite similar to some of the areas that you raised, Sharol. There are a lot of opportunities for education, as we've been talking about, finding ways to demonstrate how the organization is actually using AI for good, so to speak, and considering all the different segments of your particular product. So really thinking about maybe what an older segment that is a broader group of users in a particular product, maybe they would prefer to be communicated with or shown things differently from some of those other potential segments of the market. So with that, I'm going to pass back to you, Sharol.
Perfect. Thank you, Julie. I appreciate you sharing the consumer sentiments. As always, there's some great insights. So I'm doing a quick time check and we're coming close to the hour. And I know we have a lot of questions. I'd like to get to one. And I do commit to everyone, we will go through all the questions and get that out to you, but maybe we can take one right now before we wrap up. There's a lot of questions on AI. So I have one here I'd like to pose and maybe pose this one for you, Brady. I wonder if you could comment on the use of neural networks generating fake documents, including photos, to spoof biometric identity tools.
Yeah, so for clarity, they're talking about like Diffusion or Sora, the new tool from OpenAI, to kind of break some of the options that exist in the market, like confirming this is Brady's face, this is Brady's voice, etc. And so that is moving very, very, very quickly from a offensive side. I think it would be challenging, right, from a defensive provider side to get injected into like that Facebook chat or other places where that stuff may come from, and then playing the cat and mouse game of identifying, generative AI content. I think is quite challenging, right? Because it's really good at learning and generating new content. I think the better approach long term would be to utilize data to be like, hey, you sent us a payslip, you don't work at this company, right? And that's data that you can use to kind of identify risk, or hey, this passport doesn't exist, right? Rather than trying to find that the photo is fake, validate the data of that information and use that from a defensive strategy. I think this on the offensive side is going to get better really, really fast. And then it's going to be quite hard to identify, right? If you look at generative AI video a year ago to today, it's been almost logarithmic improvement, which we would expect to continue. I think it's going to be very challenging to pick out generative AI content versus verifying the underlying details of that content seems like a much more successful approach. And so that is the area of interest for me, is how can we identify this stuff pre-issue based on the underlying data versus playing whack-a-mole with how good generative AI is getting in terms of producing content via neural networks. Back to you.
Perfect. Thank you, Brady. And thank you for that question. We do have several questions on AI. And again, I promise we will be getting to all of your questions and getting that out to you. Now, we are wrapping up. And so I want to thank Julie and Brady for the great insights that you've shared and the overall impacts of AI on fraud and just consumer sentiment on a whole. Now, I'd like to invite all of you to take a look at the bottom right of your console and register for our upcoming Q4 2023 Market Pulse Consumer Credit Trends. This is a week away, so please register. I saw a few questions. Again, we will get to them, but questions related to the impacts of delinquencies and bankruptcies. These insights will certainly be covered at this Consumer Trends Credit session on March 7th, so please register. We also have upcoming on March 19th, our Market Pulse Q4 2023 Business Credit Trends. Again, you can register at the bottom right. I want to thank all of you for joining us. Again, please also take some time to complete our survey. We definitely appreciate the feedback and we incorporate that going forward. So please take some time to fill out the survey and let us know what your thoughts are. I hope you've enjoyed today's session. It was a lot of information. We will be getting back to your questions, but thank you for joining us and have a great day, everyone.